All right. Good morning, everybody. Happy Tuesday. Welcome to the morning show here on Stock Market TV. It's the best morning show in finance. I am Spencer Israel. I've got JC Parets and Steve Strazza and Chartmaster Alfonso lurking backstage. What's on the docket for today? Let's see. Our guest, John Roque, will be joining us at 8:50 Eastern Time. He is the head of technical strategy at 22V Research. But we got a lot of charts to talk about. JC had his conference call, so we have some highlights, just a snippet, just a tease of the charts discussed last night. We got to talk about Apple, some positive commentary today on that from Wedbush. We'll talk about Instacart, maybe IPO. Do we care? I care. I'll be honest. I do care about that. I don't know if the guys do. I know actually. I know JC doesn't. Steve might, but anyway, that's the plan for the day. Good morning, chat. Smash that like. Here we go.
All right. Good morning. For the record, I don't know why you would just assume that I don't care about the Instacart IPO. Explain to me why I wouldn't care.
I mean, maybe you don't care like before it starts trading, right? That's maybe what I should have said.
I don't necessarily care before it starts trading from a market standpoint, but dude, I'm like Instacart's best customer.
Really?
I should rephrase. My wife is Instacart's best customer.
Okay.
To be clear, dude, I got it because we got 3 kids, man. Nobody's got time to go to a grocery store. Are you crazy?
I use it almost every week, and I have no kids.
My daughter really loves going to the grocery store, and if we ever took the boys to the grocery store, they would probably like it too. But it's hard, So we've been ordering Instacart since COVID. I think when we needed it back then, and now we just got used to it. It's great because you can order from Wegmans. You can order from the cheaper grocery stores. Depends on what you want. You can order from Sam's. My wife orders Sam's. She gets all kinds of like diapers and all that stuff. Instacart, man. It's pretty great.
All right.
No? You order Instacart, Spencer?
I don't need to, but like, at this point in my life, but I could definitely see a time in my life and I will need to use Instacart for sure.
100%. Personally, to be fair, I actually like going to the grocery store. I like picking out my avocados. I get the cilantro. The Instacart people bring me parsley. So like I wouldn't screw up things like that.
Produce is a problem.
Yeah,
you got to pick out your own produce. I try to stay away from the fruits and vegetables when I do Instacart.
We don't have a choice, man. We don't have a choice. Speaking of fruits and vegetables, orange juice, new all-time highs. Cocoa pushing up against new highs. Live cattle, feeder cattle. It's a thing. It's a thing. What do you say we hit the state markets there, Mr. Israel?
Yeah, let's do that.
Listen, man, I got to tell you, Mr. Strazza, we look at a lot of charts around here. I don't know if you heard. We look at a lot of charts. A lot.
Oh, yeah.
Is there a more important trend in the world that is being talked about the least? Throw it up. Show them to the people. By the way, I'm stoked that John Roque is going to be our guest today. John Roque is one of my favorite technicians of all time. Huge influence on me for sure. You'll probably, if you see his work, you probably see some of my work in his, or I should say some of his work in mine would probably be more fair. How do you think, John? This is the first thing I'm going to ask him. What do you think he's going to say about this?
I think he'll agree that commodities are the place to be and have been.
Man, nobody's talking about this. This is year 4 of a secular bull market in commodities. Year 4, Strazza. Boy, does time fly, doesn't it?
Well, what sector has been outperforming most over the past few years? It's not tech.
Oh, no question. Energy. If you look at the 3-year returns, dude, the 3-year returns on a sector basis, like energy's up like 180%. And I think the second best performer is like tech at 40 or something.
That's right.
It's like not even close. Like energy's like on another stratosphere in terms of performance over the last 3 years. So yeah,
So
right.
tell me why this is the most important chart right now, and what do we do about it?
Well, the larger the time frame, the more important it is, right? Like this isn't like a 2-week chart, right? Where like the trend is not really that powerful. This is a series of lower highs in equities versus commodities. If you flip it upside down, it's a series of higher lows and higher highs in commodities on a relative basis. But this sort of it kind of paints the picture, kind of sets the stage for everything else happening in the market. So when we talk about tech, when we talk about communications or consumer discretionary or industrials, or we talk about energy or material stocks or healthcare, all of that falls within the context of a multi-year secular downtrend in equities relative to commodities. No.
Well, I think that's the most important point of this, right? As good as stocks were off the COVID lows, commodities were outperforming and have been. That's been the trend, right? You remember what happened over here on the left side of the chart? Over here, this exhaustion at the last peak.
Yes.
Crude
I
oil
remember
negative.
very well.
Yeah. So stocks were crashing, but still outperforming commodities because of what was going on with crude oil.
Because crude oil traded below zero. So crude oil trading below zero, can you think of a more appropriate end to a commodities bear market than just the, you know what? It's not even like a low price to buy it. Like I'll pay you to take it instead of like selling it to you for money, I'll pay you to take it away. Like that's how bad it got.
Yep. Yeah.
And that was the end of the commodities bear market that you can argue started in what, 2011? You can argue started earlier. 2011 is probably about right.
All right. So where do we go from here?
Well, it doesn't look like up.
But hold on. You got this big trend line pointed out here. I'm not the biggest fan of trend lines.
I'm not either, for the record. It's just sort of to show the series of lower highs.
I could redraw this with a base that began when stocks bottomed last summer. Couldn't I?
Yeah. You can also draw an uptrend line from those lows that are breaking down.
This is a sideways 200-day moving average chart at this point.
Yeah. Fine. And if you're making a bet higher or lower, what are you betting?
I don't know. Maybe the base needs more time, but I see base.
No. You can't do this. Yesterday we did this on the Fed hikes or Fed cuts, and I said nothing, and you said no.
You can't.
You can't. One or the other, up or down. So don't give me this bullshit about like, oh, it needs time. Higher or lower?
It's going lower for now. This line is going lower. Commodities continue to outperform.
We take out those last year's lows?
I don't think so. No.
You don't think so?
I see.
So that was it. It was a 3-year decline.
I see sideways in this chart right now, like a lot of other charts.
And secular and trends in commodities, particularly on a relative basis, do they usually last a few years or do they last a decade?
Listen, we'll see.
So you're going to make a bet that this is the first time that a commodity secular trend only lasts a few years? Are you going to make that bet?
I don't think it would be the first time. And by definition, secular trends last a long time. So I don't know what you're saying.
I think that most investors, almost all investors, are not positioned for these levels to break to the downside. I don't think position, or I know for a fact that they're not positioned for a decade-long secular bull market in commodities.
I think energy stocks are probably the best place to be through the second half of the year.
Yeah, orange juice investors would beg to differ.
I said energy stocks, so within the stock market.
All right. But it's true though. I mean, these commodities. I mean, live cattle, feeder cattle, orange juice, cocoa, sugar, killing it, man.
Listen, if we're being real, it's hard for the average investor to access these markets in a responsible way. Some of them, just the margin requirements in some of these futures contracts are kind of silly.
Yeah, fine, but is the average investor our problem? Like, is that our problem that the average investor can't participate? Isn't that part of the bull story?
No, you know what?
Uncle Joe can't buy it.
What I'm saying is it's too bad. Like, I think one day we'll have like a real commodity boom, and you'll see all these new platforms popping up that will make it easier to access commodities markets.
Maybe.
Like, that hasn't happened yet. Think about it. The average investor can make fractional investments in art and freaking Nikes and old jerseys, right? And all these different collectibles. And now even bonds are becoming, a lot easier to access. Not commodities.
Let me tell you something, Strazza. When the retail investor, it's easy for the retail investor to invest in commodities futures. Do you think that's near the beginning or near the end?
Yeah, the end for sure. But I think we get there one day. Is what I'm saying. If we have we'll
selling it to these retail investors, you can have it.
Wait, you're acting like we don't have like commodity ETFs, right?
Well,
like
not for orange juice.
You're so wrong, Spencer. We track all of the new ETFs and delistings. They just delisted like 15 of these things that have been around for.
I hate to say it, but Strazza is right, Spencer. There's nothing
no,
there.
Yeah, for like the smaller commodity markets.
They suck. No, they suck.
No, like there's like S&P 500 ETF or Q's ETF for commodities. Like they try and they fail. They try and they fail. Like there's nothing there, man. There's nothing there.
Not even a big.
So it's not just that there's no inflows into commodity ETFs. There just aren't any commodities ETFs to even flow into. Like, if that doesn't tell you where sentiment is. By the way, can you just go to the next slide? Go through the next few slides just so people can see what we're talking about here. Right. This is no joke. Sugar, right? Making new highs. So here's to Spencer's point. Here's a commodities ETF. Is this what you meant, Spencer?
Yeah, basically.
Just because you're trading this piece of shit doesn't mean that other people should.
I don't understand why you have to call this a piece of shit. Why is it a piece of shit?
I'll bet you it trades 20,000 shares a day.
Full disclosure,
trades 66,000 shares.
Full disclosure, I sold this yesterday. I was so bored.
Oh, what'd you do? You sold the base breakout?
It's only $22 million in assets. So Strazza is right. I hate that I've said Strazza is right like 3 times already. The show just started.
This thing was so boring.
Keep going.
I can't.
Keep going. Feeder cattle futures, new all-time highs. Next. Live cattle futures, new all-time highs. Next.
These have been the leaders.
Orange juice, new all-time highs. Next.
Livestock has been the place to be.
Cocoa's next, baby.
For a while.
Let's go. I mean, listen, these fat Americans with their sugar and cocoa, I mean, right? It's got to be next.
Is Ian on today or Sean? Who do we have today?
Pat on Tuesdays.
Pat's on Tuesdays. Why don't you check the document there, Strazza? Right? The one that's Slack to us every morning?
I had a meeting this morning. I had a long meeting this morning, just ended, just so I could join you guys.
Oh, how nice of you to join us.
Yeah.
Listen, if you want to skip it next time for your meeting, I could just hang out with John Roque all day. You know what I'm saying? Like I could tell you all about it afterwards. Listen, go to the next one and show this crude oil. Highest prices all year, Strazza.
Look, this chart looks great. I really, you know how I feel about energy right now.
I do.
I like it a lot.
Strazza's talking his book. All right, what about the next one? Is the next one this is a good John Roque question that I'm going to ask him. Gold trades a lot more like a currency than it does a commodity, but we don't really have secular bull markets and commodity super cycles without gold participating. This is kind of part of the bunch. Seems like a breakout's inevitable. I'm pretty sure Roque is going to agree.
I don't know.
Put words in his mouth.
You guys,
yeah, right.
I think you guys both have slight gold bug tendencies.
Well, I used to be a gold bug in the 2000s. Yeah. So was Roque, by the way. I feel like Roque influenced my gold buggishness back then. Fortunately, because it was a good time to be a gold bug.
I know your work, gold bugs.
Yeah, well, that's why I can make fun of gold bugs, because I used to be one, right? You know what I'm saying? Like that makes it okay. If you were never a gold bug, you have no right, right? You know? So I can make fun of Cubans. I can, Cubans are great swimmers. I can say stupid things like that because I'm Cuban,
So like everybody else, you've been waiting for this base to break out for 10, 15 years now?
Yeah, pretty much. I mean, listen, not 15 years, but the last 3 years since we got back up here, really.
Yeah.
Right? Since we got back up here.
Is this a cup and handle?
I don't know. Shout out William O'Neill, Mr. Cup and Handle, rest in peace. The man. I'm not a cup and handle guy. I'm not like a one of these like name every pattern guy. It looks like overhead supply. I mean, that's it, and until we're able to break out of it, we're stuck below overhead supply is really what it is. If you look at gold priced in euro, yen, British pounds, rupee, all these other currencies, gold well above those 2011 highs, like way past it already.
Is that cheating though?
Why? Because everything priced in yen looks good?
Like gold is at new all-time highs in Turkish lira.
What's not though? That's my point. What's not?
But like, I don't know. It's traded in dollars. It's a dollar market.
No arguments here. I'm just saying.
All right.
Gold price and other currencies has already been doing well. To me, it seems inevitable that price in dollars, it breaks out too, especially if this is in fact a commodity super cycle that we're now in year 4 of. And I just don't think investors are prepared for it. I know you wanted to talk about Halliburton. Why don't you talk about that for a second?
No, we'll do a thing later. I got other charts.
Oh, we're doing a thing later?
We'll do a whole thing.
Oh, the Strazza Spotlight. Do we have a bumper yet for the Strazza Spotlight?
We'll do a thing. Don't rush my thing.
Oh, I didn't know that this was going to be your thing, right? If you would have put it on the document, I would know. Oh, Strazza Spotlight's going to be Halliburton and, right?
If you gave more attention to energy in your state of the markets any of the past few days, I wouldn't have to do this, but no love for energy, over here.
It's my biggest position. What do you mean? It's been my big, I'm in, bro. Let's go. I'm in. All right, let's do a quick rundown of the markets before we bring in John Roque. Dow futures flat, big nothing burger this morning. S&P futures flat, big nothing burger this morning. NASDAQ futures down slightly. Treasury bond futures down slightly on the 30-year, down 40 basis points. Gold up slightly, 16 basis points. Silver up 40 bips. Copper down 1%. Oil up 1.5%. Natty gas up 2%. And then the dollar index is mixed with the VIX inching higher, rates inching higher a little bit as well. And that is your futures rundown, brought to you by Stock Market TV.
Yeah, you're getting better at this. You ever listen to WFAN, JC, when you went to school up there?
No, I mean I know of it, but I don't listen to the radio.
Oh, Spencer, WFAN.
Sure. What about it?
You're familiar, right? The 2020.
I'm familiar.
Or the Flash.
I'm more of like a hot 9-7 every day. That's my word.
No, dude. 660 WFAN was where it's at, Mike and the Mad Dog. But they had the 2020
my father listens to sports talk radio. I bet you Roque listens to a ton of sports talk radio.
He probably knows exactly what I'm talking about. But I think it was every 20 minutes, and at the top of the hour, they did like a flash, like a 2020, played like little music. You gave a little update, and then brought to you by whatever. It would be like Tempur-Pedic mattresses or some shit. It'd be Umberto's Steakhouse is what it really was. But that's what you should do, JC. Sponsored by PassiveInvesting.com.
All
right. Let's bring John Roque on the show. He's the senior managing director and head of technical strategy at 22V Research. He's here right now, and he's got the charts. Let's do it.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. John Roque. Wow, wearing the All-Star shirt. I like the gear, John.
You look
It's good to be with you guys. Really are. I heard Strazza say it earlier. I wrote it down so I didn't forget it. It's good to be with Mike and the Mad Dog on the morning show here, or Boomer and Carton. Call it whatever you want.
So, John, I figured you would know what I'm talking about. Wasn't it called like the 2020 Flash?
That's what it was called.
Yeah. So that's what we need, something like that, JC. And you could talk about your futures and where gold is every 20 minutes.
That's a little excessive. I don't think people need to hear that. Ladies and gentlemen, for the record, Mr. John Roque, the Rogers Hornsby of technical analysis.
I like that. Very good. I like
see what I did there? Much. You like that, huh?
Thanks. The greatest right-handed hitter of all time. Thank you very much.
It's just math. No, right?
You don't need to say more.
Nice. What's the best sports reference you got going for markets right now, John?
Oh my gosh. I've used a lot of Oakland A's references, because of some deterioration. I think the market here might be like the Yanks, just kind of hanging around 500, internal deterioration. they can draw some headlines or hit some bombs, but really, it's really challenging. Really challenging.
Some disappointing acquisitions.
I think that the market is very much like the Yankees. For the last 34 trading days, there have been 31 days on NASDAQ where you've had more than 100 new lows.
Wow.
If you could find me one long-only investor who's made money since July 31st, that guy gets the King of the Ring, belt, because it's impossible to make money long when new lows outnumber new highs. And we've seen that happen for 31 of the last 34 days.
Yeah, say more about this internal weakness, because since midsummer, right, there really hasn't been any constructive rotation. It's been energy's working, nothing else is.
Well, the corrective phase actually began in mid-July, so you're right on the money. It's been going on for 2 months. I'm reluctant to use the word rotation because by time it's already 4 or 5 weeks in, it's when we notice it. We don't notice it early on. Number two is I've yet to find the rotation champion to go on CNBC to tell us how he or she has rotated their way to great returns. I think what we ascribe to rotation might just be Strazza's algo selling to JC's algo to selling to my algo. But we call it rotation because we need to provide some narrative to it. But I don't know that it really is, because I don't know that any manager can successfully do this time and time again to win the investing championship year in and year out. So I don't think it really happens.
John, I want to get to your charts. You've been, for those of you who don't know, John's been a huge influence on me over many years, especially early in my career, mid-2000s. I think your sports references got me, John. I think your keep it simple approach got me. I think your I love the work that you've done over the years on sector market cap as a percentage of overall market cap. That was always really attractive to me. So thank you for all of that.
Thank you. You're welcome.
I have a chart for you. Why don't you show them the stocks S&P CRB index? And I want to hear your thoughts on all of this. By my work, this is potentially the 4th year of a structural bull here in commodities relative to equities. Any thoughts?
So I'm going to say that it is rare that you'd have a commodity bull market in which gold does not participate. In fact, I don't know that I've ever found one in which gold is not a participant. It doesn't have to be a leader, but it has to participate.
Yep.
Number two is I don't know that there is a commodity bull market here because copper and industrial metals are generally weak.
Yeah.
And what we've seen over the last few years is that oil has really been the leader of this advance. And that's okay that there should be one leader, or maybe there's cattle and sugar, and maybe cocoa's building, and maybe hogs are participating, or maybe it's orange juice. But I don't know that this is a broad-based commodity bull market if gold is not moving higher and metals are not moving higher.
Well, gold's been averaging about 10% a year during this period.
Right? Let's be, we're going to be critical. And I know some people might say, might use the term derisively, gold bug, but I don't think gold bugs are any different than equity bugs or bond bugs or anything of that nature. Gold's gone sideways since late 2020, and it is right up against its 2011 highs. So this is kind of the 4th visit to the 2000 level. Yeah, the uptrend is still intact and it's still strong, and I think it gets the benefit of the doubt. But I don't know that anybody's really made money owning gold here over the last 3+ years. And in addition, I don't know that anybody really wants to buy gold because I think the 5 investors still extant who have ever made real money owning gold, probably those guys are retiring, assuredly and regularly. I don't know that there's anybody still really involved who have made big money owning gold. So maybe it does break out, and if it does and nobody's around to buy it, maybe it means it'll last for a long time. But gold's gone sideways for a few years, and I know that I've been jammed on it a few times.
Yeah, John, but in the old days, when I first learned of you and your work, I mean, being a gold bug was cool. I mean, all the cool kids were gold bugs.
I'm gonna play the age card here. When gold was making its low in 1998, I had many lunches and dinners with anybody who had ever made money in gold who was still in existence. I went to go see Jim Grant speak. I went up to Boston. I met with the 5 mafia families to see who was interested in gold. I had many meetings with Jean-Marie Eviard, who is a Buffett disciple and a tremendous Hall of Fame value investor. And all of the people at that point thought that gold would hold its relative value while stocks were really expensive. Politely, without hubris here, and just telling you the truth, I wrote a note on October 31st of 2001 entitled Totally and Unequivocally Bullish, and it was about gold, and gold was priced at about $280. Almost nobody at that time thought that gold could rally on an absolute basis. They thought it could work relative to stocks because the PEs were so expensive. Now you can't find anybody who believes gold can work either absolutely or relatively. The entire environment has changed.
Well, isn't that a good thing for gold?
I think it is. If it breaks out, terrific. There'll be a lot of demand for it. But show me something here. Break out.
Any thoughts on, I always feel like gold kind of like acts more like a currency than a commodity. When you price gold and all these other currencies, it's taken out those 2011 highs a long time ago in every other currency. Does that mean anything to you, or is that cheating?
No, I don't think it's cheating. I think it helps. It means that if the three of us are sitting in India, then perhaps we did own it in rupees. That's okay. I mean, it could mean that we own it in euros. That's fine. I don't think it's cheating at all. It kind of depends where you're domiciled.
Yeah. Whenever Wisdom Tree or one of these launches a gold ETF price in other currencies, that's when you buy gold in dollars?
I don't know if it's that easy. I'd like to think it is, but I don't know that it is.
Fair. All right, let's get to your charts. What do you got?
Okay, so I said something to Spencer. I still think it's appropriate. It was a week ago because I screwed you guys up, and then there was a change here. Number one, I think we're still in a corrective phase. Number two, the S&P and NASDAQ are coming off of all-time egregiously exuberant, excessive overbought readings. They're still excessively overbought. I think also that Apple has risk to 150. Again, I'll use the metaphor for NASDAQ being your favorite team. The data is updated. We now have 34 trading days. 31 of them have had new lows greater than new highs, and 31 of them have had new lows greater than 100. I think the dollar is a buy and a pullback. And I sent a note out, a bunch of weeks ago, which had said, to quote Twain, reports of the dollar's death have been greatly exaggerated. Japan's the best big market globally. Europe's equity markets are rolling. And I think, and I use the analogy of the famous movie, The Man Who Shot Liberty Valance, that people wanted to print the legend that the Fed has already solved the inflation problem. Well, I think the two of you guys will agree with this last point, especially if the Fed solved the inflation problem, why aren't rates going down?
And why are we making new all-time highs in OJ, cattle, right? All these things, sugar, they keep ripping. Cocoa keeps ripping. All these things are doing very, very well. Oil, the highest levels of the year. I
had the good fortune to spend 4 years at Soros Fund Management. I don't know Mr. Soros Sr., but I worked for Robert Soros. And Robert Soros said to me in 2012, John, the bond market never lies. He's right. The bond market never lies. So if the Fed has conquered the inflation dragon or slain it, then why are rates not going down?
What do you?
I know this is just my anecdotal input, but I went to Costco on Sunday. My bill's a third higher than it was a year ago. So's your bill.
And if you look at a chart of crude oil and gasoline printing these reversal patterns, those prices are going to flow through to CPI very soon too, right?
Well, I'm going to say that if they don't flow through to CPI, they flow through to your wallet. So whether or not the CPI catches onto that, I'm uncertain. I do believe, however, that if anybody is going to make monetary policy in this country, they need to solve for a few variables. Number one, they need to pump their own gas. Number two is they need to do their own grocery shopping. And number three is they probably need to know 3 or 4 union employees. Then they might have a better idea of what inflation or prices to the real economy or to, let's say, rank and file Americans really mean. not to people who are driven around in Fed chauffeured town cars.
So that's funny. So we have the next meeting, I guess, coming up here today. What do you think the Fed's next move will be? I've been asking JC this. He thinks I'm crazy.
Steve, I'm going to give you my stock answer. I can't tell you what the people in my house are thinking. There's no way I can tell you what the people at the Fed are thinking.
Thank you. Somebody, thank you.
And I think it's that's hubris to believe that we can figure out what the Fed's going to do. But Wall Street makes a handsome living trying to tell others what the Fed is going to do. I never try to do it.
Preach, brother. Tell them. Nobody listens to me, John. I couldn't agree more with you.
I mean, it could be somebody else's game. It's just not my game. I just don't know how to do it. And I'd rather show you something that has some, mathematical grounding, has some historical inputs, rather than giving you my feelings. I don't know why my feelings are any more important than anybody else's feelings. I feel the Fed's going to do this. I just don't know how to do it.
All right, I'll give you another one.
Or care for that. I don't care either.
Here's another thing that apparently nobody cares about. Europe's equity markets are rolling. Why do you say that? And what are you seeing in those?
Does that mean rolling, like rolling?
No, like, rolling. And so I will give you my, I'll give you this true story. A few weeks ago, I contacted one of our clients who sits in the UK. And I said to him, I think Europe is going to start to work through a corrective phase. The French luxury goods stocks, which I got lucky on, peaked some months ago.
Yeah.
And he said to me, and maybe I'll cuff the quote a little bit, but he said to me, John, there is a transcendent moment happening right here with technology stocks. Nobody cares about what's going on in Europe. And so I have to believe him, mostly because I've come up with this against kind of the same sort of reply. Everybody owns the big seven. Does anybody really care about the DAX or the CAC? I think they don't, but that does not to say that they won't come in.
So how about tech stocks then? I see some charts here. You're showing us overbought readings and overhead resistance.
Okay, so I think that Apple has risk to 150. The semiconductors have weakened tremendously over the past 2 months. If the semi demand is so strong, how come the stocks act so poorly?
Yep.
I mean, take a look at Texas Instruments. Take a look at ASML, which has come in really sharply.
Yep. NVIDIA
is about 33% of the semis. Otherwise, my technical work for the semis has weakened a lot. And I wrote it right there, but I'll read it. A case can be made that there's a double top here for the stocks. Also, it's below its crested 10-week moving average, and the weekly MACD has rolled. Since 2018, I don't know that we need more historical info. That combo shows the stocks needs to get oversold, and the MACD turn upward before long holders will be rewarded again. We're not there. So I don't know why it is so hard to just show historically that sectors like semis or stocks like Apple do have cyclical corrective phases. There doesn't need to be a great pronouncement here that we're going into the soup. It could just be that these stocks have a corrective phase. It has happened before. Check the historical charts.
Yeah. John, you look at semis getting back to their late 21 highs. You look at the S&P Tech Index getting back to their 21 highs, both failing at those levels. You're seeing the exact same thing in home builders, right? Getting back to those late 21 highs, failing. You could see it in industrials, in the S&P industrials, getting back to those 21 highs, failing. We know from experience, we know from history, there's an overwhelming amount of supply relative to demand at those prices. More sellers than buyers at those prices. This is now the first time that we get back there. In tech, in semis, in homies, right? In industrials. And the market is proving that there is still an overwhelming amount of supply relative to demand at those prices. So until the market proves that demand has absorbed all that supply and can move on, maybe kind of a similar situation to gold, right? Continue to be more supply than demand at these levels. Patience, looking for opportunities to make money in sideways environments, different strategies than what worked in the first half of the year is really our mindset. Do you want to push back on any of that, or does that make sense to you?
I'm going to just add two things. Number one is I don't know that there are more sellers than buyers. I just think that the sellers are more aggressive than the buyers are aggressive at those levels. That's number one.
And it could just be one seller, right? But there's more selling pressure than buying pressure at these prices. More
number two is I'm reminded of a quote said by Jim Rogers many years ago. He said, "I don't make a trade until I see a pile of money sitting in the corner, and then I go over and pick it up."
Yeah.
You don't have to trade all the time if the setup is not there. I get questions, much I'm sure like you guys do. What do you think about this stock? What do you think about this stock? And very often I'll say, I don't have an edge there. I don't know. Because if I can't do it, or I don't have an edge to do it with my own money, I don't know how can I have an edge to help you with your money. So I don't know that I should be involved if the opportunity is not there for me. It might be there for you, and if it's there for you, then you don't need my help. But if it's not there for me, then I don't know that I can offer any help. So maybe this is just a period, to your point, where we've run into a lot of supply, and maybe it is the top of the range. I don't know. The only way you'll know is if you want to short it, have a stop just at a new high, and you'll get taken out, and then you'll have some information. But if your stop doesn't get taken out, then you should feel a little bit more emboldened about wanting to be a seller into those resistance areas.
I love the Jim Rogers quote. You know, Strazza was at Jim Rogers' house in Singapore a few weeks ago.
It's fantastic.
Yeah, it was a good guy, huh?
Great guy.
It's fantastic.
And that's great wisdom, what you just said, John. All right, then let's stop talking about the biggest stocks that everybody owns. How about energy stocks?
That is the strongest sector, no doubt. I am always looking over my shoulder or not looking around too many corners because I don't want to be, let's say, blindsided or hit by a haymaker that I wasn't paying attention to because I'm a little bit arrogant about how good the energy stocks can be. They're good, but I don't know how good they're going to continue to be if the market does weaken. It could mean that they get even better because people tend to funnel into the only thing that's working. It could be, but they're terrific. And if you got them, close the door to your office, quietly pat yourself on the back, and then let's continue to keep our risk managed properly, and then we'll be okay.
And then do you think that maybe more defensive tilt to energy when you see the correlation with the US dollar and energy? They've been moving together as money sort of flows out of other equities. You see strength in the dollar and energy together. Is that interesting?
I think that it is interesting. I don't know how much of the move can be ascribed to that. Here's my example. And if I'm wrong, I'm sure one of your viewers will tell me I'm wrong. I do not know that any algo is programmed to know the relationships that you know, or is programmed to understand the scars on your market belt, so to speak, or the lashes, or what you've been through for a cycle. So it could be that is the narrative. It could just be that the algos have grabbed these stocks, and that's where they're associated right now. But we need a narrative to help kind of round out the circle. I don't know the answer.
All right, let's talk about something important. John, who's winning the Super Bowl this year?
Oh, I'd rather you stick to baseball. It's too early in the football.
Who's winning
season.
the World Series?
I think you want to kind of give the edge to the Braves. They can pitch it and they can hit it. But I almost wonder if the Braves against the Dodgers, and my imagination says they'll be in the National League Championship Series, if that might be the World Series right there before they play the winner plays the American League champion.
And how many wins for the Knicks this season?
Oh, wow. So let's see. I'm going to say high 80s.
High 80s.
Oh, pardon me. I was thinking baseball. I'm going to say, I think the Knicks can win 52 games.
I was going to say they play 82 games.
Yeah. Right. I was thinking about baseball. I think the Knicks can win 52 games. My oldest son will tell you that they're going to win much more, but he's committed to the Knicks.
All right, and you open-minded. And what about the Nets? You like the Nets too, or too far?
I watch the Nets too because if it's not sports on the TV here, usually my eyes are closed.
All right, that's fair. All right, John, listen, man, you are the man. For those of you who don't know John Roque, if you could find one of his reports, some of his charts out there on the old interwebs, make it a point. You do great work, John. Keep it up, man.
Thanks, fellas. JC, thanks, Steve, John. Great being with you. Spencer, thanks for reaching out.
Always a pleasure.
Nice
shirt,
guys.
I love that he wore the All-Star charts
cool
t-shirt.
Yeah,
dude.
I feel bad for calling him a gold bug now.
He was a gold bug.
I know.
There's nothing wrong. By the way, it was cool to be a gold bug. Like, it's not
know.
like
He
it's
made a
not
great
like a
point.
knock.
Yeah, I know.
Yeah. It was
Um,
the equity bulls that they were the nerds, right? It was the gold bugs. They were cool.
All
where do
right.
we go from here?
I mean, I'm good for the day. I mean, how do we top that? That was fantastic. I'm broke in the house.
I can quickly talk about some headlines on my radar, and then
let's see.
And then we can bring Kimmy on here.
Yeah,
A few things of note. What?
Can you have some things to tell us that like what's in the news?
When's
today?
this Instacart IPO?
Yeah. Instacart IPO is going to happen today. That's probably the big like stock specific story of the day. $30 is the price, right? Bit of a haircut on the valuation since 2021, but
It's the high end of expectations. It was priced at the high end.
Yeah.
What are you talking about?
Yeah. No.
Yeah, but this is a down round.
Yeah. Both of those things are true.
Andreessen gave him 50 milli at like a higher valuation or right around here, right? Something like that.
That's how it works. Yeah. All right. That's fine. So Spencer, talk more about. You want to give a shot at explaining how they make money?
Yeah. 1 second. I'm dropping the link to John's Twitter in the chat. There it is.
Chart life.
It's an interesting model, and the biggest thing I've been hearing, trying to read up on it, is that this company doesn't grow. It's a good business. It's a solid business, but they're done growing. And I'm thinking to myself, how are they done growing? Like Instacart's not been around for very long. My parents don't use it. My grandparents don't use it. Like, how are they really done growing? I don't know.
I don't think so. But here's what you're referring to. Instacart, I mean, yeah, they are a grocery delivery company, right? That's how they make the bulk of their revenue. But what's growing is not the grocery delivery business. It's the advertising business. If you look at their S1, they mentioned the word advertiser or advertising or some variation of it almost twice as much as they mentioned the word delivery, right? So that should give you an idea of where their head is at as far as...
How many times did they mention AI?
Yeah, but hold on. They advertise what they're delivering, to be clear, right?
Yeah, what are they advertising?
No.
They're delivering.
No. There are how many? There are 5,500 brands that are using Instacart ads. So they're actually advertising on Instacart. So while you're shopping, it's like Amazon, right? It's while you're shopping, there was ads throughout the app.
So they're paying for placement.
Yes, just like you would in a grocery store.
There's like an Amazon Prime for Instacart also.
But that's their advertising revenue.
I have that.
Right?
Yes. I have that.
Different. Paying for placement so that the Procter & Gamble brands are at the top when you look for soap. That's advertising revenue to them.
Yes. And it is no different than a grocery store. They pay for placement there too, right? Their ad revenue nearly doubled from 2020 to 2021, and last year it was up another 30%. So basically 29% of their revenue and growing is coming from this advertising section, right? So they're still a food delivery company, but really an advertising company in a way.
No, that makes sense. Yeah, the food delivery is like a loss leader.
So is their customer base, is their user base done growing?
I would hate. I wouldn't think so.
That's what I'm hearing though. But
they keep adding stores. By the way, you see my fundamental analysis. They keep adding new stores. So like when you go to the Instacart, like you can go to you can get Costco, you can get like Giant, you can get Rite Aid stuff, CVS.
Not for long. You're gonna get Rite Aid stuff, but
I think they've already gone bankrupt a few times by this point.
All right. Anyway, but to Steve's point, like my parents don't use Instacart, but like what are my parents gonna do when they get older? Like they're not gonna go grocery shopping forever.
Yeah.
I mean, right? Like what did our grandparents do before? I don't even know like how do people shop?
When I was a kid, my mom used to drop me off at my aunt and uncle's house, which was across the street from the grocery store, and then she would go to the grocery store and then pick me up after.
Oh,
that's cool.
I mean, that's because that's what you had to do.
Well, I would beg her to because I'd rather play with my little cousins when I was a kid than go to the grocery store with my mother.
Yeah, all right.
You know what I mean? So that was just a convenient situation.
Sorry, guys.
What the hell was that? Anyway, $30 is your IPO price. Instacart expected to start trading sometime in the middle of the day today, and that'll be kind of the big market news of the day. Besides this Fed meeting that we have, but the decision for that comes tomorrow.
They
All
meet
right.
too much. Don't they go on vacation or anything?
Yeah.
Why do they always meet?
I agree they meet too much. All right, let's bring Kimmy on here. See what she's watching this morning. You guys ready for Kimmy? I know you
Let's
are.
go. Kimmy.
Hey guys.
What is up?
So
Kimmy,
my mom uses Instacart because she doesn't drive anymore.
there
so
you go.
Do
she
you
just
use
gotta
it?
You know, so if I can't get her to the store, she has Instacart, and she loves it.
So what? 3 for 3 yesterday, huh?
Yeah. You know, it was like pulling teeth. It's the market. You know, it bounced up to the SPYs bounced up to 445 resistance and then pulled back. I think everybody's waiting on tomorrow. And even if he doesn't raise, which way is the market going to go? Right? Is it going to go up or is it going to go down? It's just, you know, I put Adobe as an idea today. I'm not even sure, you know, just because I make a recommendation doesn't mean it trades well. Yesterday I was looking at Dick's. It completely fell over, so I never touched it. You know, it's not that many great setups. So we'll see what happens today.
And is that a function, you know, when you talk about not a lot of great setups, is that a function of the messy market environment that we're in?
Yes.
Yeah.
Yeah. It's just not, things aren't that enticing. So I tell people, you know, keep your powder dry, wait for the great setup, wait for something, and we'll see. You know, it's kind of like, you know, you could take a hiatus if you want.
Right. So here's Kimmy talking about being patient and a hiatus. What's the over under on how many trades she puts on today? I'll set it at 3.5.
3.5. How do you get a half?
Well, Kimmy doesn't bet on sports, as we could tell. So when you make an over under bet, you have to make it binary. So you can't say 3. You got to make it a half. So it's either 3 or 4, right?
Well, did you see the Giants on Sunday? The comeback? No.
Why on earth would I watch the Giants? I'm a Dolphins fan, Kimmy. I watch real teams.
I want everyone to know I bet on the Cardinals last week and I cashed at halftime. I'm a genius. You're welcome.
You can do that?
Yeah, you can cash. Yeah.
Well, my Giants came back around. You know, they came.
I didn't know you were such a Giants fan, Kimmy. Since when?
I always was. I was huge Giants. You know,
Oh, excuse me.
I used to go to the game, and then they got so terrible. After a while, it'd be so boring watching them. I was like, oh my gosh.
So you're not a Jets fan?
No.
Thank God.
JC, nobody is a Jets fan.
I was talking to Kenny Glick yesterday on the phone, and he was just complaining about the Jets half the conversation that we had.
All right.
By the way, Kenny Glick coming on to the Chart Summit next week.
Yeah.
So email
him.
So was Kimmy.
That's right.
Right, Wednesday, right?
Yeah.
Yep.
I never met Kenny Glick, and he's a trading service too, right?
Yep. Kenny's the man. You don't know Kenny? We got to get you guys together. But now you're down in Georgia. When are you coming back up to New York?
He's in New York?
Yeah, he's in Jersey.
He's in Jersey. Okay. I mean, when I make a trip there, it's kind of hard now. My dog, you know, and everything get going.
Yeah.
So.
How's Liberty doing?
She's doing good, thank you. She's doing well.
Good. All right. What else is on your mind market wise? Looking for a breakout in Adobe. If it doesn't hit, no big deal. Anything else here?
You know, the banks are still coming. Morgan Stanley sitting right at the 200-day at like 88.72. It's hard to see where it's trading this morning. You know, it looks good. Whether it's going to push through. If it does push through, there's potential up to 90.50. So it's name I'm watching. Goldman's hanging on as well.
Yeah.
Those two look, you know, good to me unless, you know, they just fall over, right? So
no, Kimmy, great looks. Berkshire Hathaway is making new all-time highs. I really am impressed with the strength in financials during this correction over the last couple of months. You nailed it. Goldman Sachs, Morgan Stanley, and you know, these reinsurance companies, Marsh & McLennan, Aon. There's a lot of strength in financials.
Yeah, and then what happened to Visa last week? It got walloped. I mean, it was riding high. I don't know. I don't know if it was earnings or not. It just like
came back yesterday some, and I know Visa and MasterCard, they're like, you know, they're financials technically, they're tech stocks.
Yeah.
You know, like they don't take any of the risk, right? Like the banks take the risk. I don't know. So I don't want to overthink the Visa, MasterCard. You can even argue it's a consumer discretionary. You know what I'm saying?
Right. Yeah. People keep spending, right?
That's right.
All right, guys. Kimmy's going to
Very
go to
good.
her room right now. That's where she goes every day when she leaves us. Follow her there. Catch her trades in real time as she's making them. Kimmy, as always, go make
Have a
some
great
money.
one.
Go get him, Kimmy.
Hi, guys.
All right, let me finish running through some headlines today, okay? Because we have a few more headlines to discuss. Cruise lines are all last I checked an hour ago, were all trading higher. Are they still? Yes, they are. China has announced they are resuming cruises to and from China. So that would theoretically benefit the 3 cruise liners. Positive commentary from Wedbush on Apple regarding the iPhone 15. They expect it to go on sale this Friday, and they are saying they expect a roughly 10 to 12% bump, or I guess increase in pre-orders from the 15 compared to the iPhone 14. So they like the early data out of that from Apple. Big loser of the day is Rocket Lab, RKLB. I think stock shares are down to 20% last I checked, maybe 18% now. They had a satellite launch failure, and they said it was going to be material for their quarter, so they had to give some updated guidance there about that. So that's the big loser of the day. Speaking of cruise lines, Disney out with an 8K this morning. They are going to nearly double their investment in parks and cruise lines.
I was just reading this. Basically, I mean, this is it's a good amount of money.
Yeah.
So are they giving up on streaming?
So I was gonna say I'm reading between the lines here, and what I'm going to interpret is this is them saying, screw cable. We're done with that. We're done with it. No, not streaming. Cable. Forget cable. We're done. We don't want ABC. We don't want ESPN. We don't want to deal with these carriers anymore. Charter Communications. Ugh, so annoying. Just we're out. We're done. That's how I'm choosing to interpret this.
You know,
then are they going to spin them off? You think those are done?
I said that months ago.
But if that's the case, then this company becomes a lot smaller in the future, right? Parks is not a huge part of what they do, but it's been the only bright spot for a while now. So if they're going to double down, go more into that, then they probably are going to consider maybe becoming a smaller conglomerate than they currently are. Maybe they're not in streaming at all at some point in the future.
Well, streaming is
the content.
Streaming is different. I think they don't want to own the cable television is dead or dying. It's going to be very, very, very slow death. It'll take decades, but it's already started, obviously. So,
but they're not. So cable, fine. They probably already knew that, though.
Yeah,
they're not good at streaming.
Who? Disney?
Disney. They're not.
Are you kidding me? Disney streaming's on my TV all day long.
I don't know.
I think
every way possible along the way with the different bundles.
You can tell Strazza has no kids. He's like, oh, they don't know what they're doing.
I'm on Disney more than I would like to admit.
Dude, my daughter watches the original Mickey Mouse, the original Snow White. These things are from like the 1930s, dude.
Fine.
It's actually very impressive when you know how the quality of these cartoons.
What if they just licensed their stuff out to Netflix and
they don't have to.
I mean, they chose not to do that.
Yeah.
Right?
What do you mean?
Maybe they chose.
I'm pretty sure that's working for them.
So, well, it's not working great. I mean, their guidance update for Disney Plus subscribers, which I think was last week, dramatically lower. Which the market knew. The market didn't react because the market knew that.
Is it like angry Republicans or no?
No. It's the fact that. It's all their subscriber growth was just pulled forward like 2 years because of COVID. So I
put out a tweet yesterday. See, is anybody buying this down here? Like I just threw it out there. See what kind of feedback, and like the anti-woke, hardcore Republican, like very, very angry.
That's
Disney.
That's distraction.
Yeah, go look at the comments on my Disney tweet yesterday.
Isn't that sad? A brand like Disney. Yes, people are crazy.
I look at it as opportunity. You know, all these people are all angry about it or whatever because I think Snow White is like
All right.
woke Snow White or whatever. Apparently there's like a new Snow White,
So
and
yeah.
I think that from that pessimism comes opportunity. I mean, in my experience, right? Because I really don't care either way, like woke, not woke, whatever. That's not my problem. They're like, oh, company culture. I'm like, their employees are not my problem at all. I really couldn't care less about them. I'm interested in a stock that is at support, former support, I should say, that everybody hates, and half the population doesn't like it for political reasons. Like that means anything, you know? I don't know. It smells funky here. Same.
So, but it is a thing though. What's going on? Did you guys hear? This is along the same lines. Throw this in quick, Alfonso. Did you hear about what happened with the Barbie movie? So Hollywood has problems, and like Disney's a part of that, and that's where these complaints stem from, right? Like the studios and what's in the new movies. Barbie got banned in Vietnam because if you look at this map, that dotted line way to the right by Asia is China's self-proclaimed maritime like sea border. So they claim that land, and they shouldn't. And Vietnam and the neighboring countries don't like it. So they're banning the movies, but like they're doing this stuff intentionally. Like that's not by accident that line is there.
You're right. You're right.
Josh is taking this very personally because of his love for Vietnam.
No, he's definitely right about that.
No, this stuff is happening, and it's like, how did that get into the movie? Why is that line? Why is that line?
Throw up the Disney chart, slide 1. Throw it up.
Who pays Disney more money, China or Vietnam?
Right. It's sad. Crazy.
What do you guys think? Down even, big bounces from here in the past. Everybody's angry about it. Everybody hates it. By the way, Tokyo Disney, I went a few years ago. Freaking awesome.
I stayed at a resort there. It was not friggin' awesome.
I like how everybody there, like, they dress the same. So if you go with your girlfriend or like your wife or whatever, like you two dressed exactly the same, or like in tandem, like I'm a prince, she's a princess, something like that. Like if the three of us went, we would be like the three amigos or whatever, Huey, Dewey, and Louie or whatever. Like we would dress the same so that everybody knows that we're together. Like that's like a thing there.
Yeah, it is. So pretty cool. I've never seen a more chaotic hotel lobby with people like you're saying running around in their costumes.
That's right.
I almost had a panic attack.
Yeah. It's like Halloween every day.
Yeah. All right. Last headline I have is the CEO of Square is stepping down. So Jack Dorsey, who is the CEO of the parent company Block, is going to resume those duties as well.
Who cares?
All right. I don't know. Just a headline. As the opening.
Why are you hating on Dorsey?
No, that's news today. I'm just saying like the take on that should be nothing.
Oh, for investors, who cares?
Yeah.
Yeah, you're right.
But no, that's newsworthy. Let me just bring the
and a stock offering for Neo. So that's
I saw that too. Yeah, who cares? These stocks are terrible. This is what they do. So
wow. Okay.
So let's just go full circle on Instacart. You guys cut me short. Here's what's going on. I looked through the filing a tiny bit. So revenue rose about 31%, about 1.5 billion, just over the first 6 months of the year, because I have to report all this in this one. So that's solid, right? The growth is core delivery business. No. The core delivery business is actually slowing, right? So the number of orders were relatively flat. So they're making more money, right? Stretching that advertising revenue 31%, even though their customer base isn't growing. I really like that. I think that's awesome, right? If they're still growing their revenues, even though you're telling me that the core business, like the number of customers is about flat, what if that changes and it starts ticking higher again? They're growing revenues without growing their customer base. No?
Yeah, I totally agree. Question I just thought of though. How many food delivery apps are there? There's Instacart and
So I've tried.
Sorry. Grocery. I meant grocery delivery.
Uber Eats and DoorDash are trying to get into it. However, and I've tried it because they give you like 40% off your first order. So I tried it once a few weeks ago. It was Uber Eats, and it's a terrible experience.
Okay, so Instacart and Amazon. Right?
Instacart's good software too. Like you're doing whatever, you're on your phone, your shopper's like texting you like, oh, they didn't have this, you want this? Like couldn't do that at all on Uber Eats. It was bad.
Does DoorDash do groceries? Or
I think DoorDash is into it too. They're, like I said, they're starting. So
yeah, okay.
I
Oh,
think,
they're Shipped. Doesn't Target own Shipped? I think so.
I don't know. There's like Fresh Eats, or there's another one too. I've gotten stuff in the mail, but I think Instacart is the standard. And it's a profitable company already, right? So that's important to point out. A lot of these IPOs, especially during the last cycle just a few years ago, they come public. They're not even close to being profitable. 240 million in profit over the last.
How about just the state of the markets in general that we're getting IPOs again?
I mean, we've had 2 IPOs. To be fair, we've had 2 IPOs.
Okay,
two big ones though.
That's 2 more than 0.
Okay, non-profitable tech startups aren't coming public. We're not in that kind of a market at all. None of them. These are profitable companies that would be able to IPO in any market. And that's
what was the other one that just came out?
ARM Semiconductor.
ARM, that's right. Semi. Yeah. And that was a good one. It was successful.
It's a good company.
I've been
hearing all that, but the stock was successful.
I've been hearing about this Instacart IPO for like 3 years now, right? Like they've been trying to go public for a while.
It's been a tough market.
Yeah. Or maybe 2 years. I don't know. Whatever. Okay. What else was I gonna say about that?
You guys want to talk about my poll, JC? You want to talk about the Federal Reserve? I know that
I absolutely do not. I was actually hoping that you would just get to your Strazza spotlight because it was so good yesterday. How are you going to top it?
I've been absolutely harassed on this show now by not just JC, but now our guests as well, for wanting to talk about interest rates and the Fed's next move. That's the biggest headline today. Okay, the Fed is having their latest meeting. Nobody wants to talk about it but me.
That's right. So can we move on then? 715
people answered my poll.
Wow. Wow, you're like a rock star on Twitter, huh?
It's 740 now.
You get recognized on Duval Street?
Yeah, you have to play the game and vote, Spencer, to see the results.
No, I'm voting from our account. It was a different thing. I voted from my account already.
What'd you vote for?
On my account? Well, just now I did cut just to see the results. But
why would you vote for cut?
No, just now, just to see the results. But on my account,
why do you think the Fed's
skewing the data?
Why would you do that? God damn it. All right. So look at this, though. This is surprising, right? Because I'm sitting here saying, hey, market's not expecting this. And I looked at Fed Fund futures. I just checked them again. Fed Fund futures right now reflect nothing until next summer. I think it was June, first cut. And then you get 3 cuts by the end of the year.
Yeah, but a year ago, they were pricing in cuts this year.
Twitter, who I trust far more than Fed Fund futures.
Wow. You trust Twitter more than Fed Fund futures?
I'm only saying that because I think Twitter's got this one right? I think the Fed Fund futures, I think the market is offsides right now, like I've been talking about. So Twitter, two out of 3 respondents, and like 750 people now have responded, are saying a hike is going to be next. So this is interesting. And John was just saying rates keep going higher. We're on here talking about crude oil and commodities. I don't know.
All right, but how come they're not breaking out higher?
Dude, look at these charts.
Thank you. I see them every day.
Get Patrick on here. He looks at charts like this, and every time he says, "Oh, it's gonna fail." Are we gonna
do a Strazza spotlight? Do we have a bumper ready?
No, we don't have a bumper ready yet. The guys are working on it. Close enough.
So we talked about how, it's hard to get proper representation for energy stocks, especially, if you're in the indexes. That's a lot of what John was kind of just saying. It's big cap tech. It doesn't have to be that way, right? You can go and own these energy stocks. So many of them look good right now, and you have good options, right? So I brought along a large cap, which we'll get to today. First, let's just throw up XLE. Let's start there. We've been talking about crude oil past few days now, right? And how good crude looks. And I keep saying it looks like that in the context of this giant base for the stocks that should benefit the most from higher crude oil prices. The implications of this base resolving higher are huge, in my opinion. And everything's set up for that to happen. If you look at a more zoomed in chart of XLE, just off the COVID lows, right? We've rallied in almost a straight line higher for 2 years. Energy was the best place to be, the strongest performers. Commodities were outperforming stocks, like JC reminded us on State of the Markets today. Look at that relative strength line. And then straight sideways. while other stocks were correcting some in a significant fashion, right? Tech and growth stocks. Energy, straight sideways, digesting gains in the most constructive way possible after a massive run off of historic lows. When crude oil was at zero, nobody wanted to own it or hold it, right? If this goes higher, we break higher from this resolution. It's not just a 2-year consolidation resolving higher. It's if you go back to the old chart, this goes back to the pre-financial crisis, this base breakout, right? So I think we get a big leg higher, another year or two of outperformance from these stocks, and you want to be in the best names. Right now, oil services are some of the strongest. Throw up XES. Just love this structure. Textbook, reversal pattern, rounding bottom, resolving higher. And I like playing it through Halliburton. Look at how clean Hal is right now. That's not Halliburton.
That's the refiners. There you go.
Look at this. Touch, touch, touch. Absorbing more and more and more overhead supply. This is either the first or I think the second largest stock in the oil field services space.
I think second after the Schlumberger.
Yep. Schlumberger's better. That one looks great too. Hey, I own some. But Hal above 43 all day. I'll be involved. So watching this one closely, I just love the structure of up for 2 years, major outperformance, sideways digestion. I think we go in the direction of the underlying trend, which is higher. Halliburton's a great option, great vehicle to gain exposure.
Yeah, we get that breakout. It's off to the races, no doubt. It's a nice base.
That's what I'm watching this week.
And that, my friends, has been the Strazza Spotlight, brought to you by Bird Dogs.
Not today. No. Center point today.
Is that a center point? Shout out center point. Where's the center point bumper, Spencer?
Yeah, it was nice to put a face to a name at the studio with our friend.
Oh yeah, nice. You met Gordon. He's a good egg.
Yep.
Yeah, we have it, but I was told that I'm too excited about the documentary. It's gonna take a long time, so I should.
Hey,
it's not gonna take a long time. Trust me.
It should take one day. Jerry Carey's in here talking about ENPH. ENPH made a rather notable appearance on our hot list this morning. Do we go there?
Yes, let's hit it hard before we bring in Pat, and then we bring him in.
So hot right now.
So hot right now.
Do we have an ENPH chart?
Yeah.
Okay.
We have an old ENPH chart when it used to not suck. Remember the old days?
So that's the point I want to make. This one's come off a lot. See that?
Yeah.
Have you looked at this chart in a while?
Yeah.
Ooh wee. What is that?
Ooh is right.
So it's lost 2/3 of its value. Yikes.
Is that what it is? Really?
300 to 100 almost.
Yeah. Yeah.
Checks out.
Yeah.
So listen, old secular leader. That's why we've zoomed way out to show that. This is one that we just rode higher and higher and higher and higher for years. It was one of those COVID leaders, right? It was on all of our COVID lists back during the pandemic days. But really, ever since, gosh, this one peaked early. Looks like, you could say it peaked in 2020. It's been straight sideways. This is a massive top. 120 is that level. However, just like we talked about on here yesterday, tops do fail, right? But
throw up slide 1, Spencer, because this will zoom out on the space. Yeah, check it out.
Yeah. To draw it different.
This is exactly what Strazza was just saying.
Yeah. I mean, these stocks were red hot. And it's been a long time since they've been leaders now, right? We could rotate back into them. I don't know. It's the traditional energy groups that are showing insane leadership now. But let's remain open-minded, right? Because if we do enter an environment where solar ever does outperform again, I'm telling you, ENPH is one you're probably going to be looking to want to own, right? It's one of the better names. I think it's by far the biggest now. You have a clean level at 120, so I'd watch it there. And maybe this guy on their board, if you go back to the list, so JC, just so you know, because I know you care so much, this man is a billionaire. He's got a funny name. It's like Thurman Thomas.
That is a funny name.
So I can, thank you.
It's not the actual Thurman Thomas?
No, so it's like John Rogers Thurman or something, or Thurman John Rogers. So $4 million. He's director. I think he's like a tech guy and scientist. He was involved in Cypress Semiconductors, I think a co-founder. So just put down 4 million on ENPH as it's testing key support, right? Testing those former lows. It's interesting. It's interesting, but it is on breakdown watch. Another one that stands out is Corteva.
Yeah.
So Corteva was one of the first ones that stood out when we started tracking or started publishing our hot list way back when. So the CFO out here buying stock. Like I said, we had some Form 4s early 2022, I think. And now they're out here buying shares again. 51's a pretty clean level.
Yeah.
Play it off there. And I would say the same thing about this as ENPH. Like it's been a leader in its space. Stock.
Why is the CFO only buying $100,000 worth of stock?
I knew that was coming. I knew that was coming.
Not enough conviction to pony up.
Oh my God. Look, you even got the chat going. Piker for a billionaire. Stop it, Mike.
It's true. It's a Piker purchase. What do you want from me? $100,000? Come on, that's all you got?
You don't know this guy's life. You don't know what he's.
I don't know, man. CFO of Corteva. What's the market cap on Corteva?
He's a young CFO. Just got married. Spent money on his marriage and his honeymoon. They bought
I'm totally making that up. You don't know that.
No, but you have no idea. That could very well be the case for someone. So like
$37 billion market cap, and you're the CFO.
You know,
I think you got a couple more bucks.
If it was up to you, what would we hire like a private investigator and like send PIs to follow around like the Form 4 filers, figure out how much money they got?
I don't know about all that. What about Tommy Tuberville buying the Qualcomm?
Yeah. So Tuberville back at it. Interesting level here, huh?
It is. Tommy Tubbs at it again. Is there a more active member of Congress than Tommy Tubbs?
So markets have memory. Just ask Qualcomm investors. This is a .com bubble base that broke out, overshot its first target, and then just conveniently came right back to its 2000 or 2001 peak and has checked in there now a number of times and found support just over the past year, 2 years.
Dude, either Tommy Tuberville is studying for his CMT or he's got a technician working for him.
And how about that $100 holla here, right? Woo-wee. Key psychological level too. So Qualcomm's interesting if it's above 100. You know, this one, they talk about Qualcomm doing some really interesting things. This is one that's like getting thrown around as being a big beneficiary of all this new tech. So we'll see. Avago too.
Broadcom?
Mm-hmm.
What happened in Avago?
Micron, AMD. Just people are speculating. Like, you know what I mean? It's the most popular thing to write about or talk about these days are who are going to be the biggest AI winners, right? So yeah, I think really, did you guys listen to who was it? Rob Arnott?
No.
On what are your thoughts at Future Proof? Well, you can still listen. It was recorded. He talks all about NVIDIA, and it's like so refreshing, like to hear his perspective. He uses Cisco as basically an analog, and he's like, they still grew. They did great, right? For a decade after the .com bubble, the stock price fell consistently for a decade and a half because it had priced all of that good news in. And he was just comparing it to like, you know, that they would have to be growing faster than Amazon did in its glory days to kind of fulfill its current valuation. So it's just a good perspective, different perspective than a lot of what you're hearing because there's so much positive buzz around
on
there.
NVIDIA. I'm hearing that it's the next FTX. No, that the whole thing's a Ponzi.
Yeah, I've heard that. I don't know.
Is that not? You don't think that's true?
Is that really a thing? Are you guys joking?
No, it's really a thing on Twitter. That
Really?
yeah,
That's
there is like this movement. I don't know. I haven't looked too much into it, but yeah, NVIDIA is basically just claiming fraud. That I don't know.
I think it's one of those angry ladies on Twitter. You know, like there's some angry ladies that get together. I think it's one of those kind of situations.
Yeah.
So stupid. Listen, there's.
Well, I don't know. I don't know anything. Maybe I hope it is. Like that would be cool. Like I don't know.
That would not be cool.
Yeah.
Why would that not be cool?
Dude, listen, we're not gonna entertain this on the show. I think that's just irresponsible. This company makes real money. It's literally printing cash. It sells real products that everybody's using to get into AI.
So not a Ponzi, not FTX.
Oh, come on, this is nuts.
I don't know. I don't know nothing. I don't know nothing about no Godfather.
We've gotten so excited as stock market people about companies that had no money to show, right, for their growth. This company is literally printing money. They're going to be able to return so much to shareholders. They're going to be able to reinvest, be at the top of every new trend.
By the way, they've been raising their dividends for like 12 years in a row, something like that.
Yeah, it's not new. I mean, this company is run really, really well by Jensen Huang. It's impressive. So,
all right. Yeah. Listen, I don't know nothing. I'm just saying. I hear things. So, all right, just throwing it out there. Bring Pat in.
Pat is not here, but we can still do the chart report.
Yeah, do it. Hit it.
Yeah, all right.
All right. What do you like? What do you like?
For the day.
JC, did you make the list today? Isn't this the segment where we see if JC made the chart report?
Yeah, he made it. Yeah, he made it.
Made it again?
Every day.
I'm tired these days.
I have a word. I have to have a word with whoever's putting this together.
Why? You don't like it when I make it?
I mean, a little bit more diversity in my charts that get delivered to my inbox every day would be nice.
It's a good listen. I got 200 likes on the Twitter.
All right.
I forget how far down I have to go. I don't remember where it is. No, that's Alfonso. Hold on.
Got pushed down to the bottom.
Bonds likes the refiners. Oh, here we go. Gold.
What about Charlie Bellello with the Pfizer?
Yeah, I like that.
That's an interesting one, right? So if someone told you 5 years ago that there would be a pandemic and Pfizer would be the leading manufacturer of vaccine with sales of over $70 billion between 21 and 22, you'd probably assume Pfizer would outperform the market. Is this really fair? He's not really anchoring to, I guess, right?
I think it's totally fair.
It's just a random 5 years, though. It's just an arbitrary 5-year look.
Yes.
Well, he should
even if you anchor at a different date, it's just going to tell the same story. So that
I don't know. If he started at COVID, I think it would at least be a lot closer, right? Because Pfizer did rip for a while.
Yeah, but his point would remain the same.
And listen, it's a great point, and we've seen this over and over and over again. Look at a stock chart of Gilead. This is not the first time I'll be saying this, but these companies have zero incentive to cure diseases. It's not good business if you're a biotech company. You cure a disease, you sell a drug one time. It's not valuable.
Listen, if you anchor to January 1 of 2020, that's a fair. Would you say that's a fair anchor date?
Doesn't matter. It's the broader point.
S&Ps are up 46%.
I would anchor to November of 20, I think, or October. That was when the vaccine got first approval.
All right, let's anchor to October the 1st of 2020. Still, S&P 500 up 38%, Pfizer up 9%.
All right, so look at it this way. It's the broader point that the companies that make the best drugs or the most impactful innovations in biotech are not the best companies. And that's very different from pretty much every other sector. Like look at the best looking biotech charts, what Lilly and the ones that are selling these like disgusting weight loss pills to people. That's terrible. And then this is the one that,
what's disgusting about weight loss pills?
Oh, that whole industry is kind of.
Wait, this is the same exact thing as Cisco.
What's wrong with the industry?
The weight loss pills? Come on, man. Come on.
I'm asking. What's the problem?
No, these actually work though.
Nothing. I just think it's too bad that that's such a big market. Weight Watchers is getting involved. Everybody wants to sell.
For who?
Pill. It's too bad. Like you shouldn't need a pill.
Some people do.
But have you seen the size of these people? They have fat coming out of places I didn't even know fat could come out of.
I don't know.
Listen, get away. I know you're like a coastal elite, but as you get away from the ocean, people just get like larger and grosser.
That's so mean. That's not necessarily true.
Yes, it is true.
People are fatter who live
away from the oceans, of course. Yeah, that's true. Why are you laughing? It's not an insult. It's just math.
Yeah, obesity is a pandemic. Yeah. The stock prices reflect it. But,
That's right.
Oh well. Biotech's tough. That's a tough nut to crack. That one.
Yeah. No, I mean, listen, these stock. I mean, look at Novo Nordisk, right? We talked about it. AstraZeneca, right? These things. Yeah, listen, Sean makes a good point. Like, listen, there's some exceptions. Boulder is not on the coast, but like everybody there is like freakishly in shape. You know what I'm saying? Colorado in general is kind of like different. The mountain areas in general, but you look at the Midwest and you look at like even you go west of New York, you start going into like central Pennsylvania. I mean, you don't even need to go that far central. I mean, it's not good. Like, it's crazy.
If I can bring it back to the Pfizer for a second, this is the same exact thing as Cisco, right? They did a thing, they did it really well, but great product does not always mean great stock.
What did Cisco do?
They created the networking infrastructure for the internet, right?
How long ago?
Yeah, doesn't matter. It's the same thing. Great product doesn't always mean great stock.
Oh,
everyone, Pfizer, Cisco.
Oh, research in motion. Yeah, I mean, Aaron put it well, right? These biotech companies want to be in the subscription revenue business, just like all growth stocks. You cure things by definition. You're not in that business. That's it.
Yeah, they're not looking for a cure for cancer. They're looking for things to support cancer patients, right? They're looking for
treatment.
You know how many of these, you know how many of these big biotechs lose in the case of a cure for cancer? I mean, I don't want to even get into this kind of a conversation.
Yeah,
but
there's a lot of money to be lost if that.
Well, I mean that's why there are government incentives, right, to incentivize people.
Not enough. Not enough. No. They should get awards for curing diseases. There should
monetary awards, not trophies.
That's right.
I was going to say a trophy.
Yeah. No, monetary award. That's right.
Make it a race to cure cancer.
That's exactly right. Strazza's. I hate to say it again. That Strazza's right, but he's right.
I agree too.
Money.
All right.
Can we talk about something nice and fun like football?
Yes, I have something great. Hit the recess bumper.
Something great. Okay.
Great. Right. Excellent.
Here we go.
Honestly, the oven is underrated. I put 2 racks of ribs in the oven on Sunday morning, 15. They were in there at 250 degrees. They were in there until about, it must have been in there till like 3 o'clock, right? That's about right, 7 hours. And then I just turned it off and I left the ribs in there for like another hour or 2.
Okay.
Let me tell you something. Very simple. You start with the mustard. Get like a spicy mustard, right? And then you use that as the base, and then you season it. Garlic powder, onion powder, salt, pepper, cayenne, a lot of cayenne, right? Get a nice kick in there, right? And then wrap it in aluminum foil so that it like steams in there, really smokes itself. You stick it in there, just set it and forget it, man. Fall off the bones. Oh, actually, garlic good. My wife was like, "You're not going to throw the garlic?" I'm like, "Well, yeah, what? Throw some garlic."
What did you say you cooked it on?
What at 250?
What
250, like 7 hours.
What did your house smell like?
Oh my God, so good. Like I would go outside and then open the door and come back in, and like the whole house just smells fantastic.
Oh yeah. All right. When did you do that? This weekend?
Sunday.
Good. Nice.
Yeah, good football food.
Hell yeah.
Roman program, by the way. Good healthy eating. Animal protein.
I'm glad you mentioned that, JC, because that's my recess today. I just stumbled upon this tweet. Because you're on Twitter, but I missed like 98% of the tweets on my timeline because no one's.
That's
on
what the
Twitter.
chart report is for.
That's what the chart report's for, right? Anyway, I just happened to have seen this tweet yesterday from one Phil Perlman, and he's doing a 36-hour fast starting last night, ending tomorrow morning. And I thought, well, it's been a minute since I've done one fast. I'm going to try this. Now, I'm doing this for a couple reasons, one of which is to practice because there is a fasting Jewish holiday coming up, Sunday night to Monday night. So this is like a dry run for that. But also, I haven't done one of these in a while. I don't know if I'll make it the full 36 hours. In fact, I probably won't. But I'm going to, make it at least to tonight. And then we'll see what happens. We'll see how I'm feeling at 8 p.m. tonight. But I'm putting this out there for the world to hold myself accountable. I'm in on this 36-hour fast with Phil Perlman.
I told him I'd do the next one because I'm playing tennis today, man. And an hour and a half of tennis, I come out of there starving. I'm not fasting tonight.
Yeah.
I'm going to be dead after tennis.
Have either of you ever done something like this? Because I haven't, and I wonder how hard this would actually be. I feel like
not that hard. I do 24s all the time.
Yeah, 24 24 is actually surprisingly easy. Nick, not that difficult.
No.
I've never done 36.
You ever just like forget to eat and it's like 3 o'clock? Like, okay, I fast too. Sometimes.
Yeah, but I do it on purpose. But yes, if you have like a 5, 6 o'clock dinner, you could wait till 5, 6 o'clock the next day to eat again. It's not that hard.
Yeah. Sarah's telling me I need to drink more water. Sarah, get in line. Everyone says I need to drink more water. I don't drink nearly enough water.
Especially when you're fasting and not eating carbohydrates and stuff, you're gonna be dehydrated. You really need to drink a lot of water. And if you guys have like gone periods, like I don't think I've had a carbohydrate in a week or a sip of alcohol since California, by the way.
Yeah.
I've been so good since we got back.
Water.
So all right, we'll just keep it on Perlman. I talked to him for like an hour this morning. And this was one of the things he was saying: water all day, a lot of water. But then you taper it off at night, right? Because you don't want to drink too much before bed, and then it ruins your sleep. You got to wake up in the middle of the night and pee. And then he also, he yelled at me for drinking those juice shots. They're so good. You ever have these little
juice shots?
The ginger shots. They're in like the produce section at the supermarket.
I don't do that stuff.
It's a ton of sugar.
There's a lot of carbs in them.
Who knew? Terrible for you.
All right. Well, here's the thing. Like juice.
That's it on the label.
I love juice. Why can't somebody just like make a good juice that I can buy in the supermarket? Because you don't want to make that mess in your kitchen. You ever try to like cut up ginger? That's not.
Yeah, I do it all the time.
Oh God, no.
Yeah, man. My ponzu recipe comes with ginger.
Yeah, I'm not doing that. How do you even cut like a ginger root?
No, you just peel it and you put it in the press, in the garlic press.
Yeah.
And it cuts it up for you. Get a garlic press that's both a press and a slicer, and it'll slice them into little pieces.
I'm not like you. I don't like to spend too much time in the kitchen. I'm in and out when I'm in the kitchen.
Let me tell you something. Where you live, you can get some nice fresh tuna. With my ponzu recipe, woo, you're gonna be eating that every night.
He yelled at me. He said I should be eating more fresh fish too, and he's right about that. So that's on my list.
Ready? 2 parts soy sauce, 1 part rice vinegar.
You've told me 100 times.
2 parts soy sauce, 1 part, right? So half a cup of rice vinegar, full cup of soy sauce.
Mm-hmm.
And then ready? And then you squeeze a whole lemon, you squeeze a whole lime, and you squeeze a whole orange. All right?
Yeah.
And all the juice flows in. And then you dice, and then you dice fresh ginger, red onions, cucumbers, and jalapenos.
That's complicated.
Toss in the old tuna, a little dippy dip, yum yum yum.
So, is orange in all ponzu sauce, or is that like a special ingredient?
Listen, a chef, a properly trained chef, not knucklehead like me, but like a properly trained chef, taught me this recipe. And he said, if I ever shared it, he'd have to kill me. And I've shared it with everybody I know ever since.
You're dead.
So, before we get off, there's been 2 questions in the chat now about government shutdown.
Yes.
I really don't care about that. This happens all the time. It
does happen all the time.
I wouldn't overthink like a government shutdown. It's just, this is business as usual.
Shut them down. Get rid of them completely. Who cares?
No, they won't do that.
Are you
Also,
kidding me?
They are short-lived events anyway, right? Like,
Get rid of them.
What's the longest one? 2 months?
Dude, there's way too many government employees. Are you kidding me? It's some communist shit.
Don't overthink U.S. politics.
I know. That's true.
That's for sure. All right. That'll be a good place to end the show today. As a reminder, we've got Twitter Spaces at 11:30 a.m. Eastern Time. That's on the Chart Report's Twitter handle. Chart Request Live with JC and I at 1 o'clock and at 4 p.m. Eastern Time today. The live event with JC and Christian Tharp. I have dropped the link to that in the chat. I will throw it up on the screen via QR code as well. There it is. That's at 4 o'clock today, Eastern Time. It is free, but you do have to register, so there's the link to do that. Thanks to our guest today, John Roque. Thanks to all of you for hanging out. Thanks to Kimmy Sokoloff. As always, hey, if you like the show, do us a favor. hit the thumbs up. We'd appreciate that. So
we have like a chart summit. So we have some sort of like event coming up. I'm hearing about.
we do have a chart summit.
1 week from today.
I'm glad you mentioned that. It's 1 week. What's today? Tuesday? Yeah. Okay.
Well,
one week from today. Next Tuesday in the afternoon. It'll be like an afternoon, evening-ish hangout. Beginning at like 4:30, and then all day the following Wednesday. Let me make sure I have the links for everyone, and I'll drop it in the chat right now. Thanks for the reminder, Steve. I did forget to mention that. It's chartsummit.com, but I'll drop the link in the chat for everyone to sign up. We are almost, I'm going to say like 98% finalized on the speaker schedule, waiting for like one more person to confirm. But we'll be sending out that note today or tomorrow as soon as it's finalized. There's a link in the chat, chartsummit.com. It'll be, basically just a day and change of hanging out, education, and talking about the market.
And if those of you who have been to our chart summits in the past know, we have an impressive speaker list. You're going to learn a lot. And Stock Market Mike, shred ginger with a grater. He's absolutely right.
I will tease the list of speakers real fast.
You know how you Italians with the Parmesan?
Yeah, it gets stuck, and then it's so hard to clean, and I want to use it for my cheese, and it's got pieces of ginger stuck in there.
Dude, your first world problems. I can't even.
List of speakers at the chart summit includes there's more, but includes Brian Shannon, includes Frank Capillari, includes Jeff Hirsch, Kenny Glick, Joe Fahmy, and more. That's 5 of like 15 I just named. There's more. So that's just a tease of what to expect for next week. So check out the link there and sign up for that. And we'll send out an email today or tomorrow with the full speaker schedule. And that is a good place to end the show. So everyone have a great rest of your day. Drop us a like, subscribe, say hi to us on Twitter. We'll see you on Spaces. See you on CRL. Have a good one. Go make some money.
Adios.
Later.
Run it. I can't take no loss. I don't even